Hello, and welcome to Freedom One Financial Group's next installment of the 8-Minute Update. I'm Chris Walker, and I'm joined today by Roberta Angelo.
Thanks for having me, Chris. I'm excited to talk about some positive news in the markets.
And we have a lot of positive. This is our mid-year investment update, or our scorecard, on how we've done thus far this year. And I'm real pleased with what I have to report. Let's start with where we were 6 months ago. And if you remember, things were pretty dark 6 months ago. We weren't really sure where the economy was heading. There was talks of the next Great Depression. And it was a pretty frightening time. There's no doubt about it. And the markets reflected that. There was a lot of volatility in the markets. And if you recall, there was talks of the credit market or the bond market closing down. Things have improved a lot. Since then, we've had some economic stability. You know, locally, we still have problems, obviously, with General Motors and the Chrysler bankruptcies. But even those went better than we thought they would go. As a result, you've seen the stock market rally. And although we are in a tough recession, there's no doubt about that. Things are not good, but they're certainly not as bleak as they were 6 months ago. And the markets have reflected that. It's probably best to look at the stock market. And you can see here, this is for the last 6 months, that during the worst of times, the stock market went down quite dramatically. And at one point was down over 50% from its high. Now, it's recovered quite substantially, and you can see the black line up there will show you that the market year to date is actually back right where it started. So it's been a very volatile ride, but we're happy to be back to where we started.
Yeah, it has been a wild ride. Hey, tell me, why do we look at the S&P 500 when we're talking about the overall stock market?
It's a good question. There's a whole host of different indices out there. The S&P is really most broadly recognized as the best barometer for the stock market. Now, you have to understand it does not include international stocks. It doesn't include the small caps. But for the general health and direction of the market, the S&P is really thought of as the best barometer out there. We don't invest only in stocks, though. We invest in cash and in bonds. And we should take a quick look to see that really all of those different asset categories have started to respond in a little more normal. So you can see that they're all up year to date. Now, cash really hasn't produced. We all know that interest rates are very low right now, and cash hasn't produced hardly anything. Bonds have produced a more normal return, and stocks had actually a very dramatic recovery in the second quarter. But you can see here year to date, they're pretty much performing as we would historically expect.
It's so nice to move into a more normalized looking chart. I'm tired of looking at everything upside down.
Yeah, there's no red numbers on this, and they're all above the horizontal line, so that's all nice. If we look at specifically the mutual funds, the stock mutual funds that Freedom One has selected, you can see that during the second quarter they all had spectacular returns. And that was pretty much in line with the general market. Now, our funds, we're very proud of the way they performed, but even more important, if you look at the 6-month performance of these funds, and remember that the general market was pretty much flat, and you can see that a lot of our funds had some very impressive returns over that 6-month period of time.
Yeah, amazing. It looks like there's about 5 of them that have double-digit returns over that period.
There are, and we're very fortunate and grateful that those performed in that way. Now, as I mentioned, we not only do stocks, but we do bonds, and our bond mutual funds pretty much had the same story as the stocks. Is that during the second quarter they performed very well. But even more impressively, our bond funds have done very well year to date. Now, if you recall at the beginning of the year how we decreased the amount of money that we put into stocks and increased the money that we put into bonds, that played out very well for us. So not only did it help us on the protect mode, because the markets didn't go down as much, but on the prepare mode, our bond funds are actually outperforming our stock funds, which is really what our plan was, and that's really working out well.
And you notice that the yellow one, the Loomis Sales Bond Fund, really had exceptional returns. And I remember that was the one we were concerned about a little while ago. It was on our watch list, but we held on to it because we hoped for this type of rebound in this type of environment.
Yeah, not only did we hope, but we spent hours and hours and weeks doing research on that and to gain our confidence. So that worked out to be a good decision, even with the power of hindsight. Probably our biggest thing that clients and the sponsors are concerned about is what's our performance? How did we do after all of this work? And this chart here represents how our different maps have performed. And you can see here the blue lines indicate how well our maps did. And you can see that the most conservative did a little over 3.5%, all the way up to the aggressive, which was greater than 6.5%. The yellow lines represent an index. And what we've tried to do is to replicate general indices and how we would expect to perform. So the yellow is really how we should expect to perform. The blue is how we actually did. So I'm very pleased with that. Freedom One, there's really two jobs that we're supposed to do. One is to go through and determine what our MAP allocation is, and that's how much we put in stocks and bonds and cash. And the second is mutual fund selection. I'm real pleased to say that the investment team here at Freedom One really passed the grade on both of those over the last 6 months. Not only did we get the appropriate MAP allocation, but we also, the mutual funds that we selected did better than average. So I'm very pleased and proud of the team here at Freedom One.
Yeah, I'm happy too, and I know that the investors are as well, but they're probably wondering, is this sustainable? What are you going to do for the rest of the year, Chris?
First, I'm going to be grateful for what we got the first 6 months, but we're going to continue. The plan that we put in place last December, we still have a great deal of confidence in. We see no reason to change that. That plan was to protect, prepare, recover. We protected on the downside. We're now preparing for the recovery. The prepare mode, what we're doing is we're monitoring our capital market indicators. Right now we're in the process of doing a lot of reviewing on whether we should be increasing our stock allocation, increasing the risk to the portfolios as the markets start to recover. And finally, we're going to continue to affirm that we have the very best mutual funds. So we've got our hands full and plenty of work to do. Roberta, thanks again for joining me on this latest installment of the 8-Minute Update with our continued theme of Protect, Prepare, Recover. Our next installment is going to be on July 23rd. And once again, as always, if anyone out there has any thoughts on different ideas or ways to improve these 8-minute updates or topics that they might have, please complete the attached survey. That's really where most of our topic ideas come from, and we really appreciate all the input that listeners have had in the past. The final, we need to have our legal disclosures, and for all of those that are concerned about this, please make sure that you take note of the disclosures that are on here, because they're definitely a part of the presentation. Thank you again.